Income rule. According to this rule, if income increases to the business, then it should be credited, and if there is a decrease in the income for business, then it should be debited. Let's take the example of sale of goods for cash, which is a normal business transaction. When business sells goods for cash, there are two components in the particular transaction. The first component is the sale of goods, which is an income to the business, and the second component is the receipt of cash or increase in the asset for the business. Income rule says if there is any increase in income, we should credit it. Likewise, asset rule says if there is any increase in asset, it should be debited. Therefore, for this transaction, since there is increase in both income and as well as asset, we will debit the asset and we will credit the income. Therefore, the journal entry for this would be debit cash and credit sale of goods. But can income decrease? Yes. Just like there can be decrease in case of expenditure, in case of income too, there can be decrease in income. For example, a buyer who has purchased goods from us might return a part of the goods. In that scenario, again there will be two components to the transaction. One is the decrease in the sales, the other being decrease in the asset. Since the moment they return the goods to us, we will have to return the cash which they had given to us. Therefore, both the cash as well as the sales will decrease. Since the rule says if there is any decrease in asset, we have to credit, and if there is any decrease in income, we will have to debit it, we will do the same. Therefore, the journal entry in this case would be debit sales returns and credit cash. Instead of debiting sales, to differentiate sales from sales return, we will debit sales return, which is nothing but decrease in income.